Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from FiscalNote Holdings Inc. Don't let the name scare you. It's not about writing down government spending, though it kind of deals with that. Think of FiscalNote as a company that helps businesses and organizations understand and navigate the world of government regulations and policies. We'll see if their own financial policies are something to take note of. Wink wink. This isn't their quarterly or annual financial report, but a special current report called an 8K, which companies file when something important happens. In this case, it's about a deal they made to exchange some old debt for new debt. Essentially, they're rearranging their financial obligations. Let's get into what that means. The big news here is that FiscalNote entered into a securities exchange agreement with a company called EGT11 LLC. FiscalNote is basically swapping some older debt called original notes for new debt called exchange notes. The old debt was from way back in 2020, before FiscalNote went public through a business combination. Now they're cleaning things up by replacing that old debt with this new agreement. It's like trading in your old car for a slightly newer model. There are actually two exchange notes. The first one, called the initial exchange note, is for $5.5 million. The second one, the subsequent exchange note, is for a smaller amount of $269,000. So the total amount of debt being exchanged is around $5.77 million. These exchange notes are basically promises to pay back the money, but with some twists. One important thing to understand is that these exchange notes are subordinated. This means that if FiscalNote runs into financial trouble and can't pay everyone back, the holders of these exchange notes will be lower on the list to get paid compared to the company's other lenders who hold senior secured indebtedness. It's like being in the back of the line at a buffet. Here's where it gets a bit more interesting. Starting 6 months after they were issued, the exchange investor, which is EGT11 LLC, has the option to turn these exchange notes into shares of FiscalNote's Class A common stock. This is called converting the debt. The number of shares they get depends on the stock price at the time of conversion. Think of it like having a coupon that you can redeem for company stock. FiscalNote also has a similar option. If the shares are easily tradable, the company can force the exchange investor to convert the debt into shares. It's like the company saying, okay, we're doing this now. To sweeten the deal, FiscalNote gave EGT11 LLC 2,475,000 shares of its common stock. These are called fee shares. It's like a bonus for agreeing to exchange the debt. They will also give 121,050 fee shares when they issue the second note. There's another potential payout for the exchange investor. If after selling the fee shares and the conversion shares, EGT11 LLC doesn't make at least 145% of the original debt amount plus interest. FiscalNote might have to give them even more shares, called additional shares. This is like a guarantee that the investor will make a certain profit. There is also a sell-off period. If the exchange investor doesn't receive the cash they want, they will be given shares. FiscalNote didn't just give shares to the exchange investor. They also gave 300,000 shares to Northern Securities Inc. This was for their help as a broker in this deal. So basically, it's their commission for making this deal. The exchange notes have some standard rules about what happens if FiscalNote doesn't follow through on its promises. If the company fails to pay, doesn't deliver the shares, or breaks any of the terms of the agreement, the exchange investor can demand immediate repayment of the debt. There are some routine things like guarantees and promises between FiscalNote and the exchange investor. However, as the filing says, the promises and information in the exchange agreement were made specifically for this agreement only, and investors should keep in mind information the company files with the Securities and Exchange Commission, or SEC. To allow the exchange investor to resell the shares they get from converting the debt or as fee shares, FiscalNote has to register these shares with the SEC. This is a common step to make sure the shares can be freely traded. FiscalNote has to file the first registration soon in April of 2025. There are more items that are routine, such as obligations, sales of equity, and reference to exhibits. Taken out, let's zoom out and talk about the big picture. FiscalNote is essentially restructuring its debt. They're replacing old debt with new debt that has different terms and conditions. This could be a good thing if it lowers their interest payments or gives them more flexibility in managing their finances. However, it's important to remember that this new debt is subordinated, which means it's riskier for the lender. The deal also involves giving away a significant number of shares. These fee shares and potential additional shares could dilute the value of existing shareholders' holdings. This means that each share represents a smaller piece of the company. One thing to watch out for is the potential need to issue additional shares if the exchange investor doesn't make enough money selling the shares they receive. This could put further pressure on the stock price. Overall, this deal seems like a way for FiscalNote to clean up its balance sheet and manage its debt obligations. However, it comes with some risks, especially the potential dilution of existing shareholders' equity. FiscalNote is a company navigating a complex world of government regulations and policies, while there is no specific financial table mentioned in the report. Understanding FiscalNote's financial status involves checking its balance sheet for debt levels and how it impacts its senior secured debt. It is important to remember that the new debt is subordinated, meaning that it is less secure and riskier for the lender. It's also important to check whether the company needs to give additional shares, potentially diluting the value of existing shareholders. Truth in the end, FiscalNote is making a bet on the future and is making smart moves to remain a player in its area. Thanks for watching. If you found this helpful, please give us a like, comment and subscribe for more corporate deep dives.